Hey everyone and welcome. Today we're diving into a massive tax update here in India that could totally change the way you think about owning a second home. So if you own property or you're even thinking about it, you are definitely going to want to stick around for this.
All right, let me ask you something straight up. Do you own more than one home? Maybe you've got your main family home and another one you keep for work or maybe for weekend getaways. If that sounds like you need to listen closely because the tax rules have just been given a major shakeup, and it all kicks in from the 2025-26 assessment year.
So to really get why this update is such a game changer, we've got to rewind a bit and talk about the problem it's fixing. For years, the old tax rules created this real headache for anyone who owned more than one property. It was confusing and, frankly, pretty expensive. Okay, so here's the heart of the problem. It was this tricky little concept called deemed let-out property. Now, what on earth is that? Well, under the old system, if you owned a second home and it was just sitting empty, the tax man basically said, hey, we're going to pretend you're renting that out. And then they tax you on that notional or imaginary rent. Yep, you heard that right. You were paying tax on money you never actually received. As you can imagine, this was a huge financial drain for a lot of people.
But, and this is the really good part, that's all changing. The 2025 rule change comes in to fix this exact issue. And believe me, it's bringing some serious relief to property owners all across the country.
So what is this big change? Well, it all boils down to one single number, 2. Just the number 2. What in the world could that mean for your properties and your taxes? Let's find out. And here it is. This is the big reveal. That number 2, that's how many homes you can now claim as self-occupied properties, or SOPs. And what that means is their annual value for tax purposes is considered nil. Zero. Zilch. No more tax on imaginary rent for that second home. This is huge. So let's just put this side by side so you can see how big a deal this is. The old rule? You could only pick one property, just one, as your tax-free self-occupied home. Any other vacant properties? Bam! You got hit with that notional rent tax. But now, you can claim up to 2 homes as self-occupied. That's double the benefit.
And this next part is absolutely crucial. You see, it used to be that you had to prove you couldn't live in your second home because your job was somewhere else, all this paperwork, all this red tape. Well, guess what? That whole restriction, it's gone. Poof! It no longer matters why your second home is vacant. You could be keeping it for your kids, for retirement, whatever. You can still claim it as self-occupied. This makes life so much simpler. So, with all these new rules in place, the whole property tax world really just boils down to 3 main categories now, and it's super important for every homeowner to know which is which.
Okay, let's break this down. First up, you've got your self-occupied properties. You get to choose up to 2 of them, and their annual value is nil. Nice and simple. Second, you have a let-out property. This one's pretty obvious. It's a house you're actually renting to a tenant. You'll pay tax on that rental income, but only after some nice deductions. And third, that old deemed let-out property idea, well, it's still around, but now it only kicks in for your 3rd, 4th, or any additional houses you own that are sitting empty.
Right, so what about those properties you are actually renting out? Or for any that happen to fall into that deemed let-out category? Well, understanding how the deductions work is absolutely key, so let's decode that right now.
The calculation for this is actually pretty straightforward. Think of it like a simple 4-step recipe. Step 1, you start with the total rent you collected for the year. Step 2, you subtract any municipal taxes you've paid. Step 3, you get to take a flat 30% standard deduction right off the top for things like repairs and upkeep. And finally, Step 4, you deduct the interest you paid on your home loan. Whatever's left over at the end, that's your taxable income. See? Not so scary.
Oh, and here's another really important clarification that came with this update. For your rental properties, it's now explicitly stated that you can deduct interest you paid on a loan even before the house construction was finished. This used to be a bit of a gray area, so having this spelled out clearly is a big win for landlords and just makes the whole process much fairer.
So, we've waded through the rules, the definitions, and the deductions. But let's zoom out. What does this all actually mean for you in the real world? Well, the goal here was clearly to make life easier for homeowners. Let's bring it all together and talk about why this change really matters.
The benefits are just crystal clear. First and foremost, a reduced tax burden. That ridiculous tax on imaginary rent for your second home is gone, period. Second, it's just so much less complex. No more jumping through hoops to prove why you can't live somewhere. Third, you get incredible tax planning flexibility.
You can now strategically choose which 2 of your properties to declare as self-occupied to get the biggest tax break. And finally, the rules on deductions are now fairer and much clearer for everyone. It really is a win-win all around.
Okay, as we start to wrap this up, let's just boil it all down to the most critical, must-remember points you need to walk away with.
So here's the bottom line. If you only remember one thing, make it this. The biggest benefit is you can now claim 2 homes as self-occupied and completely wipe out that notional rent tax. And the most important consideration? If you own 3 or more homes, any property beyond your chosen 2 will still be taxed as deemed let out if it's sitting vacant. So you've still got a plan for that.
And that really brings us to the final thought here. You see, this isn't just some tiny tweak to the tax code. It's a strategic shift. It gives homeowners like you more breathing room and a whole lot more flexibility. So, the question I'll leave you with is this. With these new, simpler rules now in place, how will you plan your property investments and your tax strategy for the future? Thanks so much for joining me.